developments following United States attacks on Iran. On June 21st, 2025, United States forces conducted airstrikes on 3 Iranian nuclear facilities, Fordo, Natanz, and Isfahan, in a significant escalation of the Israel-Iran conflict. President Donald Trump described the strikes as a spectacular military success, claiming Iran's key nuclear enrichment facilities were completely obliterated. The attacks followed Israel's earlier strikes on Iran starting June 13, aimed at disrupting Tehran's nuclear and ballistic missile programs. Below is an overview of Iran's reaction, ongoing developments, and the anticipated market consequences based on available information. Iran's reaction. Iran's response to the United States strikes has been a mix of official condemnation, restrained military actions, and threats of escalation, reflecting both defiance and caution. Official condemnation. Iran's foreign ministry, via state-run IRNA, condemned the United States strikes as a grave violation of the United Nations Charter, international law, and the Nuclear Non-Proliferation Treaty. Foreign Minister Abbas Araghchi stated that Iran reserves all options to defend its sovereignty and interests. The Atomic Energy Organization of Iran acknowledged the attacks, but claimed no radioactive contamination occurred, asserting that nuclear sites were evacuated and enriched uranium reserves relocated prior to the strikes. It vowed to continue its nuclear program. Hossein Shariat Madari, a prominent advisor to Supreme Leader Ayatollah Ali Khamenei and editor of the hardline Kayhan newspaper, called for missile strikes on United States Navy ships in Bahrain and the closure of the Strait of Hormuz, a critical oil shipping route. He framed this as an immediate retaliatory step, citing a Quranic verse to justify aggression. Military and proxy responses. Iran has not yet launched direct retaliatory strikes on United States targets, but preparations have been reported. The New York Times noted Iran has readied missiles for potential attacks on United States bases in Iraq, Bahrain, Qatar, and the United Arab Emirates if the United States joins Israel's campaign further. Iranian-backed militias in Iraq and Syria, as well as the Houthi rebels in Yemen, have signaled readiness to target United States forces. Houthi official Hizam al-Assad posted on X that Trump must bear the consequences of the strikes, and Yemen's Houthi-controlled forces threatened to target United States Navy warships in the Red Sea. Iran's missile barrages against Israel have continued, though their scale has diminished due to Israeli strikes on Iranian missile launches and storage facilities. Since June 17th, Iran launched smaller attacks, such as 2 to 3 missiles per barrage, with no significant damage reported in Israel. Internal measures. Iran imposed temporary internet restrictions and banned public filming to control information and prevent panic. State media has minimized images of destruction compared to earlier in the conflict. Residents in Tehran reported fuel shortages, cash machine failures, and widespread fear, with some hiding during air raids. Diplomatic stance. Iran has rejected ceasefire negotiations while under attack, informing mediators Qatar and Oman that talks are impossible amid Israeli and United States aggression. Araghchi urged Trump to pressure Israel to halt its campaign, suggesting diplomacy could resume if attacks cease, but emphasized Iran's focus on confronting aggression. Global reactions. Israel. Prime Minister Benjamin Netanyahu praised Trump's bold decision, claiming it would prevent Iran from acquiring nuclear weapons. United Nations and allies. United Nations Secretary General Antonio Guterres called the strikes a dangerous escalation, urging de-escalation. Latin American nations like Cuba, Chile, and Venezuela condemned the United States' actions, warning of regional instability. United States domestic Senate Minority Leader Chuck Schumer demanded Trump justify the strikes and pushed for the War Powers Act to be enforced, citing risks of unilateral war. Some Republicans, like Senator Roger Wicker, supported the operation but urged caution, while others, like Representative Thomas Massie, called it unconstitutional. Trump's MAGA base is split, with figures like Steve Bannon questioning United States involvement, market consequences. The United States strikes have heightened geopolitical risk, impacting global markets. Below are the anticipated effects as markets reopen on Monday, June 23, 2025, based on analyst reactions and historical patterns. Oil markets prediction: Brent crude is expected to open 5 to 10% higher, potentially reaching $80 to $85 per barrel, with West Texas Intermediate at $75 to $80. A worst-case scenario involving Iran closing the Strait of Hormuz could push Brent to $120 to $130. Rationale: the Strait of Hormuz, handling 20% of global oil trade, remains open, and Iran's key export facility, Karg Island, was not targeted. However, threats to close the strait or attack Gulf oil infrastructure have raised supply disruption fears. Oil prices surged 7 to 8% after Israel's initial strikes on June 13th. Impact: higher oil prices could fuel inflation, pressuring central banks like the Federal Reserve to maintain or raise interest rates, potentially slowing United States economic growth. Stock markets prediction: United States indices, Dow, S&P 500, Nasdaq are likely to open lower, with declines of 0.5 to 1.5%. The S&P 500 may drop below 6,000, mirroring its 1.13% fall to 5,976.97 on June 13 after Iran's retaliation to Israel's strikes. Rationale: geopolitical uncertainty drives risk-off sentiment. United States stock futures fell marginally on June 15th, and Asian markets are expected to face pressure due to energy price sensitivity. However, some analysts suggest a quick resolution could limit losses, viewing the strikes as a one-and-done event unless Iran escalates. Sectors: energy. Stocks like ExxonMobil up 2.2% on June 13th, and ConocoPhillips are poised to gain 2 to 4%. Defense: Lockheed Martin, RTX, and Northrop Grumman, which rose over 3% on June 13th, may climb 3 to 5%. Travel: airlines such as Delta and United, and hotels like Marriott could fall 1 to 3% due to higher fuel costs and Middle East flight disruptions. Emirates and Etihad suspended regional flights until June 30th. Technology: Nasdaq may underperform, dropping 1 to 2% as investors avoid riskier assets. Safe haven assets. Prediction: gold futures up 30% in 2025 may rise 1 to 2% to around $3,500 per ounce. The United States dollar could strengthen, with the dollar index gaining 0.5 to 1%. United States Treasury yields may dip as demand for treasuries rises. Rational: gold and the dollar rallied after Israel's strikes, with gold futures hitting a high on June 13th. Investors are likely to seek safety amid fears of Iranian retaliation. Cryptocurrency prediction: Bitcoin and Ether may drop 2 to 5%, with Ether already down 5%, and Bitcoin 1% after the United States strikes. Rationale: crypto markets often decline during geopolitical shocks, as seen when Bitcoin fell 4% to $103,556 on June 13th. Inflation and policy risks. Prediction. Rising oil prices could push United States inflation higher, potentially reaching 6% by year end if oil hits $130, according to Oxford Economics. This would reduce chances of Federal Reserve rate cuts in 2025, increasing borrowing costs and slowing growth. Rationale. Trump's tariffs and immigration policies already strain global growth, with the World Bank forecasting 2.3% growth in 2025. A prolonged conflict could exacerbate stagflation risks. Key risks and uncertainties. Iran's retaliation. If Iran avoids closing the Strait of Hormuz or attacking United States assets, markets may stabilize, as seen after Iran's restrained response in April 2024. However, missile strikes on United States bases or Gulf oil infrastructure could trigger a severe sell-off and oil price spike. Strait of Hormuz closure would disrupt 20% of global oil trade, causing a supply shock and potential global recession. Analysts estimate a low probability but high impact if it occurs. United States policy. Trump's threats of further strikes if Iran does not seek peace add uncertainty. Domestic political divisions and MAGA opposition to foreign wars could limit escalation but also complicate strategy. Weekend developments. News over June 22nd to 23rd, including Iranian actions or diplomatic efforts, could shift market sentiment before Monday's open. Conclusion. Iran has condemned the United States strikes, threatened retaliation via missiles and proxy attacks, and signaled readiness to close the Strait of Hormuz, though it has not yet escalated significantly. Markets are expected to open volatile on Monday, June 23rd, 2025, with oil prices surging, stocks declining, and safe haven assets rallying. Energy and defense stocks may benefit, while travel and tech face pressure. The extent of market disruption depends on Iran's next moves, particularly regarding the Strait of Hormuz and United States targets. Investors should monitor Iranian statements, oil price movements, and United States stock futures, opening Sunday at 6 p.m. Eastern Time for early signals. Note: this analysis is based on information available as of June 22nd, 2025, and market reactions may evolve with new developments.